Important announcement about BlackRock. Massive election shifts that could explain why the Bitcoin price has struggled for so long. The former PayPal CEO talks about the massive shift that's about to happen. The Bitcoin gold rotation. Bitcoin won't just catch up to gold, but in the long run, Bitcoin will be worth far, far more than gold. And we've got some exciting statistics on this as well. Plus, we actually have Elon Musk moving Bitcoin here. What's that all about? Michael Saylor, and much more. Let's go. Before we dive in here, go ahead and drop a like down below. Super important for higher Bitcoin prices and new all-time highs. This is completely free content, but take a second now to support us down below. As a small thank you, here's a picture of Homer Simpson for you. And now we have a very interesting statistic here from Bitwise. If we take a look here, we can see that Bitcoin has never performed worse than gold in bull markets. Again, Bitcoin has never performed worse than gold. Great chart here from Bitwise. If we take a look here, we can see the performance. And here we can see that Bitcoin has always outperformed gold. It's also interesting that Bitcoin was often either the best performing asset class of the year or the worst performing asset class of the year. And here we always see the pattern. 3 years green, meaning 3 positive years, 1 negative, 3 positive years, 1 negative, 3 positive years, 1 negative, and now 2 positive years. What do you think is coming next, a positive year or a negative year? Write it in the comments. Very important. You can also see here, if we assume that the Bitcoin gold rotation is coming, as it always has in the past. Gold leads, Bitcoin follows. Then, with just a 1% shift of gold's market capitalization flowing into Bitcoin, we'd already be at almost $134,000. If 2% flows into Bitcoin, we're at $160,000. At 3%, we're already at nearly $190,000. And we only need 4% to hit the $200,000 mark. Now, if we take the bull case and assume a 5% capital shift from gold into Bitcoin, we're at $250,000. And of course, the capital that will continue to drive Bitcoin higher won't just come from gold. It will also come from other asset classes. I tell you this often. Bitcoin is the black hole because it has superior store of value properties compared to other asset classes. Nothing is as flexible, nothing is as portable, nothing is as scarce. Nothing is as censorship resistant, nothing is as easy to verify as Bitcoin, and that's why more and more people will come to the conclusion, hey, why should I keep holding on to a property that bothers me somewhere, where you have to do renovations, where you're not flexible, where you also have to pay taxes and so on and so forth, and why shouldn't I just get Bitcoin instead? 24. Words in your head and let's go. Let's also listen into what the former PayPal CEO has to say about Bitcoin and gold, because that's really
But I think Bitcoin will be more valuable than gold, and at today's gold price, it's, $1.3 million a Bitcoin.
That it'll have a higher market cap than gold?
Oh yeah, over time, for sure. Okay. I think, it's such a much better version of gold. When the first gold ETFs were...
Exactly what I've been telling you. He says it straight up. There's no question at all that Bitcoin will surpass gold. It's just so much better. The properties are so much superior, even though I don't want to talk down gold. But yeah, that's just how it is.
Launched, they started mining more gold.
Yeah.
You can't do that with Bitcoin.
Right.
Did you hear that? That's something a lot of people don't understand. If more people want gold, then the miners will just dig more gold out of the ground in the east, and eventually from outer space. And who knows where else from. If people want more Bitcoin, there still won't be more than the 21 million Bitcoin. Game over. And that's why he says here as well, 1.3 million, easy. Because at 1.3 million, I would peg 1 Bitcoin to gold.
Bitcoin is so much better, actually, I think a lot of people, including recently Christine Lagarde, was saying, Bitcoin has no intrinsic value. But the general tale that people tell about the gold intrinsic values that you can wear as jewelry, come on, seriously? Under the underlying scarcity of Bitcoin secured by code is the intrinsic value. This is the only thing that's deflationary by nature. And so I think it's a better version than gold. It's digital. You can move it around. It's way more fungible than gold that you wear as jewelry. And so
all those supposed qualities, plus that bullshit argument, and then the third thing they always say, hey, no one's going to stuff gold into their teeth or something like that. And that's why it has more value here. Intrinsic value is just like that. Value is always subjective. It's always kind of a weird thing. You just say, hey, come on, they're making fun of it. About the gold bugs who argue like this, there's nothing wrong with gold, but just claiming it's so massively valuable because a few people are stuffing it into their teeth is obviously nonsense. Of course, it's also stable in value because it has certain value storage properties, just like Bitcoin. That means, as a store of value, we always have to consider certain properties, like scarcity. For example, censorship resistance, decentralization, security, and so on and so forth. And for thousands of years, gold has always been the store of value with the best properties, until now, when Bitcoin has come along. And that's why, for him, it's just an absolute no-brainer. It's also interesting to note that if we look here, governments and institutions own the majority of the gold supply, while private individuals own the majority of the Bitcoin supply. What do you think will happen if the government holds all the gold and its value drops to zero compared to Bitcoin? Just think logically. And there are even speculative attacks being discussed, like the idea that the US could sell all its gold at once in order to pivot into Bitcoin. Michael Saylor even suggested that once. Cynthia Loomis has also proposed something similar. Of course, before doing that, you'd reassess your gold reserves, revalue them. With that, you could buy massive amounts of Bitcoin. We still have dormant gold reserves in Fort Knox that are somehow valued at around $3 or so, which could now be revalued. That would be huge realized gains that are currently unrealized. This capital could be used smartly to launch the speculative Bitcoin attack on the gold market. The BRICS currencies are betting on gold. What could the US do here? Of course, they could wipe out all their competition in one blow, although I don't mean to say they should economically destroy other nations or anything like that. But this is the kind of game theory you really have to think through, and we're standing here at a monetary turning point. Scott Bessent, the finance minister in the US, he's not exactly dumb. He was the one who launched the speculative attack against the British pound back then. And these are the kinds of things that are on the table. Is the next big speculative attack coming? The next major monetary reset? And it's also exciting to see what's happening now with all the Bitcoin whales and BlackRock. There's a major announcement now. This was from Eric Baljunas, ETF specialist, who says here that some Bitcoin whales are exchanging their physical Bitcoins for ETF shares. And this shows us something very, very interesting. To gain various advantages after discovering the IBIT from TradFiles and traditional finance here. BlackRock has received $3 billion from this. These so-called portfolio trades are popular in the bond market, and here's another article about it. So, what's happening here now? We have Bitcoin, whales, and now we have a lot of ETF inflows. BlackRock, do they have 800,000 Bitcoin by now? I think so, or something around that number. And now a lot of people are always saying, yeah, there are so many inflows into the ETFs and ETFs. So many inflows. But the Bitcoin price should be much higher, shouldn't it? Yeah, but often it's the case that we're not seeing new inflows, but just shifts. For example, whales might say, okay, I don't want to keep part of my Bitcoin in self-custody anymore. I want to move it over to Bitcoin ETFs. I always say, it's best to do self-custody. I'll put a link below for a TREZOR hardware wallet. But yeah, there are also whales who aren't too happy about that. Or maybe they just want to outsource some parts of it. Maybe people want to protect themselves from themselves. I don't know. There are a lot of attacks these days, so you really have to structure your self-custody properly. And I don't mean attacks in the classic sense. A hardware wallet can't be hacked, but when it comes to social engineering, that's a different story. Like, someone could kidnap you and suddenly put a gun to your head. And stuff like that. Of course, you always have to structure your Bitcoin in a way that it's not just, boom, the hardware you have lying around at home and have direct access to. That way, you can avoid situations like that. Here's another really, really important reminder. I just noticed it again myself earlier. I've already told you about it, but it's just so clear to see here again. I found this chart really, really interesting. We can see that the biggest returns were here. For example, if you held during the period from 2017 to 2024, if you just kept hodling. If you missed the 10 best days here, if you weren't in the market on those 10 best days, instead of making 800% gains, you would have made a 23% loss. If you missed the 20 best days, you would have had a 67% loss instead of an 800% gain. If you even missed the best 30 days, you end up with an 84% loss, instead of over 800% gains. This just shows you, time in the market beats timing the market. That's not just true for Bitcoin, it's exactly the same story in the stock market. We often see that nothing happens, it moves sideways, or even slowly goes down. And then there are the GOT candle days, where things just shoot up. And if you're not in the game on those days, you've got a big problem. Now, we can see here as well. People are reading a big problem into this. Elon Musk has, for the first time in a while, moved his Bitcoin again. Here at SpaceX, we're seeing the first movements in 3 months. I wouldn't read too much into this just yet, but a lot of people always panic whenever Bitcoin gets moved. That's also, for example, the reason why. Michael Saylor says he doesn't do proof of reserves, because otherwise people always freak out as soon as Bitcoin addresses are moved. But it could also simply be that they're just adjusting the treasury a bit. So, there doesn't have to be any connection here that someone wants to sell Bitcoin right now. Often, people just assume, okay, the Bitcoin are moving, so maybe next they'll be sent to an exchange where they'll be sold. Here's Michael Saylor now, the Bitcoin GOAT.
Hold back credit. We traced how the world moved from, you could argue, British sovereign debt, French sovereign debt, they were all gold-backed credit instruments, and they were all backed by various amounts of gold, but it was almost never one-to-one. It was always like under-collateralized, and eventually it probably got down to 5% collateralized in 1971, and that's the end of the gold-backed credit era, right?
Right.
And so now you have digital credit, You have digital gold. You have Bitcoin. Bitcoin is digital gold, digital capital. The killer use case of digital gold is issue digital credit instruments. And the aha moment is any company, any publicly traded company can create a digital credit instrument with any degree of yield, duration, delta, or risk. And to a certain degree with any amount of volatility that they want.
He's talking again here about Bitcoin and gold in a historical context, saying that people were already creating these gold credit instruments back then, and now we're building on that. Now you can build Bitcoin credit instruments, using Bitcoin instead of gold. In fact, Michael Saylor once compared this, just recently in an interview, which I found really, really fascinating, that what he's doing with MicroStrategy is actually nothing different. It's just like what the Bank of England always did with gold. And back then, there was already a similar instrument to what Michael Saylor has now with STRC, a kind of. It's not a stablecoin, but what he wants to do with STRC has stablecoin-like properties. He basically wants to have a flexible dividend rate here, but a fixed price. So, unlike his other preferred shares, where the price is variable but the dividends are fixed. And what he basically wants to do here is create a kind of savings account equivalent, where you just know, okay, the price is always pretty much the same, the value is relatively stable, of course traded in 4 terms. And then there's a flexible dividend added to fix the price again. And they built something similar back then with gold, only at the Bank of England. And now Michael Saylor comes along and builds something like this, but not under-collateralized, rather over-collateralized, meaning it's oversecured. His assets are sometimes secured 5 times over, 10 times over, and so on. That's why, in my opinion, a preferred share from Saylor is way cooler than some lousy government bond that you end up not getting paid back for, or at least not in terms of purchasing power. You don't get it back anymore. Of course, you always get paid back, because they can just print more money, endlessly. And with Michael Saylor, at least you can preserve your purchasing power, because the dividend rate is simply higher than the inflation rate. That's the crazy part. People go and get government bonds, and can't even beat inflation with them. What the fuck? What kind of world are we living in? That means they're willingly accepting a loss, but for some people, nothing is really safe. Or they just don't care. I have no idea what's going on. Anyway, if you still want to buy Bitcoin, I'll drop a good link for you. 21 Bitcoin. There you can just do it simply. Buy Bitcoin, use a good Bitcoin wallet, save up to 20% on fees and when buying Bitcoin. See you. Peace out.